Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson, I'm going to review a few trades that we did recently, all bearish with the market breakdown, and I've titled this, Learn Bearish Setups an 8-Year-Old Can Trade. We pride ourselves in the keep it simple, stupid methodology, and I'm literally going to show you how you can teach a young person what we do objectively. We are pattern-based traders. We start with a compelling pattern like this. These are just 9 examples, simple red and green candlesticks. Then we overlay the other concepts that make up our approach. That includes such things as, okay, well, what trend is this pattern in? Is it on support or resistance? What do multiple time frames suggest about that bias? Is it showing relative strength or weakness? What are the broader markets doing? And all of these apply to all time frames, and they apply to all tradable instruments, and the opposite, of course, to the short side. So here's what we're going to be talking primarily about today: the master trader sell setup. So this is we trade buy and sell setups in trending markets. So in an uptrend, which is defined as higher pivot highs, higher pivot lows, we are looking for retracements and reversals on minor support in an uptrend. You got that, little Johnny, here? Yes, I got it. The pictures of buying can be different. It's just the same message. A downtrend, little Johnny, lower pivot highs, lower pivot lows. Got it. We are looking for retracements or rallies into resistance with pictures of selling. In a downtrend, another concept we have is called the price void, and we're expecting insignificant support to the left to allow for the move into the void. ENVX, this is a closed trade. We post all of our open and closed trades in the members area in a spreadsheet, and this we give the date, the symbol, the stock or option trade, the technical setup, and trade management all the way until conclusion. So this is, all of our daily charts are this simple. Red and green candlesticks, color-coded volume, and we use these 3 moving averages on the daily chart to help speed up the analysis. Blue 20, green 50, red 200. So long-term trend is totally flat. And you can see here that the short intermediate term broke down. This was an attempted breakout that failed. So this was a continuation breakdown. Little Johnny, I have a downtrend. I have declining 20, 50. I have my retracement and reversal at resistance. Now, I was going to put a horizontal line here to show you resistance, but in this particular case, the 200 is perfect. The 200 is resistance. So it rallied here to resistance, these prior bars, prior breakdown area, reversed, happens to be at the declining 20 period moving average also, which is a plus, and we are expecting new lows. And in this case, we buy, call, and put options when they are liquid because of the benefit of leverage and limited risk. And the majority of the time, the loss is less also than trading the underlying. The technical setup, as we're discussing, sell setup, reversal at resistance, at the 20 period and 200 period moving average. Remember, I mentioned another concept is multiple time frame alignment. Even though I'm not showing you the weekly chart, this is a bear 1, 2, 3 continuation on the weekly chart. This is a bear, this is a bull 1, 2, 3, so it's a wide range bar, bullish inside bar, and you have a continuation. So on the weekly chart, we had the opposite of that, a bearish 1, 2, 3, and we shorted under this bar's low. We got the beautiful gap down, and you can see, look, we sold the first third at $1.30, this one here. So we made 675 days on a 2-day swing trade. Another example, Rawlings here. Let's go right here to the technical setup. Sell setup and reversal daily and weekly. So it just so happened in this particular example, we also had a sell setup on the weekly. So that's multiple time frame alignment. Got it, little Johnny? We have a downtrend. lower pivot highs, lower pivot lows. Here's my rally. This is what's called a bearish engulfing range expansion. Notice at the high of this bar, it tried to bounce. Well, it did a little. That's what created the tail. And then it closed below the prior low, engulfing it. Our entry is under the low of that bar, stop over the high, manage in between. 3-day swing trade, $300 plus gain. This was an ETF, XLV, so in our master trader investment trader, we trade only ETFs for longer holding periods. And I purposely wanted to show you this, not only because we had a beautiful gain, 19-day hold, but notice all these moving averages. I marked this one. I have a lower pivot high. Now I have a lower pivot low. What are the definition of these pivots, by the way? Pivot low, 3 higher lows to the left and the right. Pivot high, 3 lower highs to the left and the right. It's just where prices pivot, and there's nothing proprietary here. The computer just spits out a little dot here to, speed the analysis if it helps. So I put this ribbon here because it did gap breakout there, but it failed. Here's another range expansion closing under these real bodies. That's our entry for the bearish turn at resistance. I got converging 20 and 50 period moving average in a downtrend, managed in between. Beautiful 19-day. We actually covered a third right here at the dead low here. Notice this. We covered 127.05 right here at the dead low. And then because of the broader market's robust rally last week, it trail stopped us out over this red bar, but beautiful, easy trade. Now this is not a sell setup per se. It's more of a what we call a master trader bearish 1, 2, 3 continuation. Remember I defined it a moment ago on the bullish one. We're in a downtrend. Look at the beautiful alignment of the 20 below the 50, below the 200. Breakout failure, bearish consolidation. This, even I think we traded it there also. We can go back and look at the closed spreadsheet, but this was a home run short right here as a breakdown. But this was the one I'm showing you today that we traded 2 weeks ago. We've been in this for 10 days. So it attempted to bounce here in a downtrend. Folks, you can't think one green bar in a downtrend is intelligent bottom fishing. It's not. We have specific criteria for trading bottoming patterns. This is not one. Closing breakdown. Here's my bearish inside bar in the lower third. Price void, look to the left. There's no support over there. So here's my technical setup. Bearish 1, 2, 3 continuation breakdown. And the weekly also had a price void. Nice $750 gain. Very, very easy trade management on this one. Finally, AVNS, bearish consolidation in a downtrend, lower pivot highs, lower pivot lows, bearish price action, green bars ignored, topping tails were attempted breakouts. This is what got our attention. This small little topping tail traded over the high of these 2 bars. Closing below those, we short under that. Look to the left, no support. Breakdown in a bearish downtrend. We're still in this trade. It's an open trade. We covered 1/3, 1905 into weakness. Notice here it's 1909. So our first target, we're out of this 4 cents lower than where it closed. And despite the robust rally in the broader markets on Friday, this is showing, remember one of our concepts, relative weakness for shorts. This is showing wonderful relative weakness to the broader markets. We are in simple trail mode on that. If you enjoy getting trades like this, which includes the education, go to mastertrader.com/advisory swing. We trade stocks, options, long, short, cryptocurrencies, ET. We trade anything that moves. Very detailed market analysis over the weekend using our techno-fundamental approach from my partner Greg Capra. We have a no-brainer $37 trial. Go to the link, check it out, and you will love it. As always, any questions, email Greg or me. Good trading. Look forward to seeing you in the next trade review video.